Silver just did something it hasn't done in 45 years. It hit $121 an ounce. Then it crashed 47% in a week. Then it bounced 32%. And Bank of America just put a $309 price target on it. If you're not paying attention to silver right now, you're missing the most volatile and potentially most profitable trade in commodities. Let's rewind. Silver entered 2026 on an absolute tear, up 130% in 2025 alone. It ripped from around $30 to over $121 by late January. Then it crashed, 26% in a single day on January 30th. By February 6th, it had dropped to $63, a 47% drawdown from peak to trough. Leveraged longs got annihilated. But here's what happened next. Silver staged a relentless recovery, climbing 32% back to the mid-80s. Then the Iran strikes hit last weekend. Gold surged past $5,400. Silver whipsawed between $82 and $94 in the span of 3 days. This is not a market for the faint of heart, but it is a market where fortunes are being made. Three forces are colliding at the same time, and that's what's creating this monster move. First, gold. Silver follows gold, always has. Gold has gone from $3,000 to over $5,400 since June 2025. Central banks are hoarding it. Investors are fleeing to it during the Iran war. When gold runs, silver runs harder, both ways. Second, industrial demand. Silver isn't just a precious metal, it's a critical industrial input. Solar panels need silver paste. EVs need silver. AI data centers need silver for conductors and connectors. Global silver demand has been in a structural supply deficit for 5 consecutive years. 820 million ounces of cumulative shortfall. And new mines take 7 to 15 years to open. You can't just turn on the supply. Third, tariff fears. The Section 232 report didn't impose silver tariffs yet, but left the door open. That uncertainty triggered a physical hoarding frenzy. Traders shipping metal to New York vaults, tightening supply outside the US. If tariffs actually hit, silver could squeeze violently. So where does silver go from here? JP Morgan sees silver averaging $81 in 2026, roughly double its 2025 average. That's their base case. Bank of America's Michael Widmer has the most aggressive call on the street, $135 to $309. His thesis is gold to silver ratio compression. Historically, when gold runs hard, the ratio compresses from over 100 to 1 down to 40 or 50 to 1. If gold holds above 5,000 and the ratio compresses, silver mathematically has to go to triple digits or higher. But here's the caution. Hedge funds are barely positioned. The net long in managed money is only 5,000 contracts. During the run to 121, it was multiples of that. The big money is waiting on the sidelines for a confirmed base before loading back in. That means near term. Expect chop and consolidation. The breakout level everyone is watching is $92. Above that, silver likely retests 100. Below 75, the bullish structure breaks. So what's the chaos capital take? Silver is the most asymmetric trade in commodities right now. It has the industrial demand story. It has the precious metals safe haven bid. It has a 5-year supply deficit with no quick fix. And it has a war in the Middle East pouring gasoline on the entire metals complex. But it's also the most volatile commodity on the board. A 26% single-day crash is not theoretical. It just happened 6 weeks ago. If you're playing silver, size small, think big. Physical silver or SLV for core positions. Options for asymmetric upside. And respect the levels. 75 is your floor. 92 is your breakout. Above 100, this thing goes parabolic. Gold gets the headlines. But silver is where the real leverage is hiding. The capital markets are chaos. Embrace it. And I'll see you in the next video.